Greetings everyone, welcome aboard. My name is Joseph James. Here's your live trading recap, April 13th, 2011. Happy hump day to you guys. How about you today? Well, pretty darn good day in the room. Not quite as good as yesterday. Yesterday was a pretty great day for us. It seemed like everything we touched yesterday turned to gold. Today was a pretty good day though too. Planned ahead, we followed our plan, made our money, and we went home. Right? Pretty good day for a Wednesday. Now Wednesdays are always crude days for us. Not always crude days, but most of the days on Wednesdays we're focused on crude oil. Now why? Because we have inventories on Wednesdays. So Wednesday morning, the first thing I think about is 10:30, I've got crude inventories. That means technically there will be 3 different personalities to crude today. On a Wednesday morning, there are 3 different phases of that market, 3 different personalities. There's the 8 to 10 o'clock personality. That's when I want to be trading it. Then you've got the 10 o'clock to 10:30, 10:35 personality. That's with the news. And then the personality after the news, right, 10:35 till about 2:15. So there are 3 sections of the morning that I'm really paying close attention to on crude this morning. We also knew today that 10:30 news wasn't the most important news of the day, which doesn't happen very often. We found out early this morning we had 2 things at the end of our day today. What were they? 2 o'clock today we had Beige Book. Now the Beige Book, what is it? We talked about it. It's on the morning prep today. Check the blog out. You can learn all about what the Beige Book is. All right, search the blog for Beige Book, right? And so of course the Beige Book at 2 o'clock, the Fed uses that for their FOMC announcement 2 weeks from now, so it's a very important news event too. And we also had Obama today talking about, well, probably raising taxes, but it was scheduled to be a speech about, what was it, long-term debt reduction. Okay, so we had 1:30 Obama speaking, 2 o'clock we had Beige Book. What does that mean for us? That means no golden lunch. We're not going to get that late morning push. People will have already hit the turnstiles by then, already gone home for the day by then. So no golden lunch. And what it means for us, if you're trading crude, make your money early. Wait for 10 o'clock to pass, right? 10 o'clock, 10:30. After 10:30, look again. So we're looking for trades early in the morning. We knew right away, though, Wednesday morning, I'm going to be cautious around 10 o'clock to 10:40. And then once we get some reaction from crude at 10:35, 10:40, 10:45, then I'm jumping in again on crude. So we went over all this morning at 8 o'clock today. We had a great plan of attack, and all we did was simply, right, we traded our plan. At 8:30, we had news this morning. 8:30, news came out flat, so we stayed patient. Right? We had 8:30, 10, 10:30 news today. 8:30 news came out, and it came out as expected. And whenever the markets see as expected news, they're usually already priced in. So we didn't see a big move after 8:30. But we had a sideways range on crude oil. And guys, I don't know about you, but I like sideways ranges. I love channels, I love wedges, right? I love sideways ranges. I would rather trade a sideways market than a trending market. At least in a sideways market, you get exact entries, stops, targets. For a trending market, you oftentimes don't know where's your stop, where's your target, how far is it going to keep going up, is it going to reverse, right? Sideways markets, they give you easy entries, easy patterns. So I'm always a big fan of sideways markets. And we saw that today on crude oil. And we actually saw 2 sideways ranges. I'll show you guys that in a second, which really got us excited today. Now, it was actually pretty easy. It wasn't very difficult. At 8:15 this morning, we knew exactly what our plan was. Sideways range, first thing I'll do is sell the highs. But we broke right through those highs, so I bought a pullback. Right? As I hit resistance, I'm a seller first, but a buyer second. If we break right through those highs, like we did this morning at 9 o'clock, I'm buying a pullback. And the first thing you notice here is there's your sideways range, right? So there's your sideways range. This was that sideways range we defined on our 34 range chart. Okay, so naturally I'm going to sell the highs, I'm going to buy the lows, and when I break out, we're going to buy a pullback. So there's your sideways range. That was the initial sideways range. And like I said, we had some interest here. We thought price would probably try to go all the way up to the highs again. Remember that? So we know where we are. Sideways range. And again, like I said, I'm going to be a seller first, buyer second. So we come up, we're going to break above 107. Above 107, we're going to pull all the way back here now to 65s. Little bit too much below that high to be buying a pullback. I wanted to be buying above 107. Second push up, new higher high. Now when I see the new higher high, we also saw speed increase, and that's what gave me the clue this thing may launch all the way up. So I buy a pullback, 907, wave pattern long. Now my entry wasn't above 107, but again, like I said, I wanted to see buyers through 107, then buy that pullback. So we get plus 6 times 2 is 12, plus 11 is going to be 23, 24 ticks, $240, buying pullbacks at new highs. So that was our first trade of the morning. And a little bit of that was based upon the fact that we had to wonder, are we going to go all the way up there to test that previous high of day? And the speed, right? That was the key. When we saw the speed increase at those new higher highs, that gave us the clue. We had the buyers in control, and we were able to buy that pullback. So first trade of the day, we're going to buy a pullback. Those buyers now fail. And when the buyers fail, I now have no choice now but to sell the highs. This is a great example of where a little bit of feedback goes a long way. So I'm reading tape. I see that speed slow down at the highs. At one point this morning, we saw the speed increasing, which got us into the highs. Now we're seeing speed decreasing. We're seeing the buyers fail. We're seeing sellers jump in. And we think to ourselves, all right, well, we gave it a shot to buy above those new highs. We're at the top of the sideways range. Now time to sell the highs. So we sell the highs now, get me below this swing low here. This, of course, at 923, two-step pattern short, 0682, 10, 18, right, 25. Now, the reason why I didn't take my plus 5, plus 10 is because of three-strike rule. We bounced off that plus 10 target 3 times. I then moved it up to plus 8, got it filled, then tightened my stop down and got bounced out at a plus 7. So the buyers fail at the highs, and I sell the highs for 25 ticks. So we take 24 ticks of the first trade, 25 ticks of the second trade, and at this point in the morning, we're loving life.